We detected an unusual trade on Target stock, ticker symbol TGT, worth $1.1 million on the last trading day. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Target or bearish and selling Target, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. Now, as you can see here from the charts, Target is currently trading right over here, which is the middle of this gap down from an earnings drop, where it bottomed here back in November. So keep that in mind, because during our analysis, you will see that this wealthy investor actually got into this position and started to buy Target at this bottom, because you can see ever since then, the stock never dropped down lower. It started to go up higher. So a very smart decision by this wealthy investor, which is why if we also want to make money in the stock market, we simply need to follow their trades. So without further ado, let's dive into those unusual options that happened on the last trading day. As we can see here on the options time and sales tape, on January 10th at 10:41 at the 26-second mark, we had these trades happening. 2,500 contracts for the 150 strike calls expiring March 21st. 2,200 contracts for the 175 strike calls, also expiring March 21st. But it is actually also 2,500 because over here at the same time, we have these trades happening 300 contracts. So 2,200 plus 300 is 2,500. And so if we estimate the total trade cost here, because we can see the price that they paid and sold for of $530 subtracted by $88, each of their trades cost $442. And since there was a total of 2,500 contracts, we multiply that out and we get a total trade that costs $1.1 million. But keep in mind, even though this is $1 million trade, this is still a lower chance of profit trade in comparison to the trades that we share on our website, where we dive deeper into the data to find out the higher probability of profit trades. Because not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. So if you want more stocks wealthy investors are trading for your portfolio diversification, then go to our website. We'll put a link at the top here where you can gain access to better trade ideas, to diversify your portfolio, reduce risk, while at the same time increase your chance of profit. Now, what do we mean by diving deeper into the data? Well, for example, this trade, we need to make sure that this trade is a new opening trade and not a closing trade. And also, we need to figure out what this trade means, because this is part of the trade, these January 17 options over here at the 125 strike calls. And so when we take a deeper look for these March 21st options at the 150 strike calls, we can see here that the open interest is 1,909, which is less than the 2,500 contracts, which means those unusual options are indeed opening trades, since that is greater than 1,909. Same with the 175 strike calls, only 1,200 contracts, less than the 2,500 being traded. So we know these were new opening trades. And that is why we also got into the same position. You can see here, POS stands for position, green means buy, and red means sell. Because based on our analysis, they were buying the 150 strike calls to open and selling the 175 strike calls to open. And so when we analyze this trade, you can see here on the risk profile that this is a vertical call spread, and we paid $425 each. And here on the graph here, the x-axis represents the share price of Target stock, and the y-axis represents the profit loss. Note the zero break-even point. And so when the lines are below it, it is a negative loss. And so as the share price goes up, it becomes more positive, profitable. If it goes down, it becomes more negative loss, because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. So this wealthy investor is going long bullish on target stock, just as we are doing as well. But remember, not all wealthy investors will be profitable. Sometimes they are at a loss. And so we have to analyze that data as well to make sure that we are following the profitable wealthy investors and not the wealthy investors who are losing, because that decreases our probability of profit. And so for this trade, these January 17 options at the 125 strike calls, where they were trading these for $1,700 Keep in mind, we need to multiply by 100 to get options pricing, since each option represents 100 shares of stock. We know that this wealthy investor was taking profits, because you can see that there's a closing trade here for the January 17s at the 125 strike calls. We have an open interest of 4,642, which is much greater than the unusual options that they were trading. But how do we know that they were profitable? Well, because we track them. That's what we do. We look at all the data. And in this case, we know when they entered their trade. Back in November, when Target dropped 21% after earnings and was trading at that $120 level. We can see here that those January 17 options at the 125 strike calls, that's when they started to open their trades. You can see here 4,000 contracts at the volume, clearly opening trades, since the open interest is much less at 948. And you can see the price that they were paying, $480 for each of these call options. And so we can estimate the profit percentage that they made, because we know that they closed out at this price. And so when we calculate their profit percentage of $1,701, subtract their initial cost of entry, $480, the price that they paid, is a profit of $1,221 per contract. And if we divide by the initial cost of $480 times 100 for a percentage, you can see that they made 254% profit on this trade, because they were able to catch the bottom for this earnings drop. When most people were very scared and selling, this wealthy investor was buying. And so you can see how the rich are able to make very smart financial decisions. And that is what we do by analyzing the data. So if you want to learn more about our data analysis, then make sure to go to our website. We'll put a link at the top here where you can gain access to the trades that these wealthy investors are making. Let us know in the comments below. Do you think Target stock will fill this gap down, since we are trading in the middle here? As usual, please give us a thumbs up. Subscribe if you haven't. Take care and have a wonderful day.